Hi guys, this is Reddy from Wealthy Options. Welcome to 26th episode of 0DTE Pulse, and today was Nifty monthly expiry. Usually Nifty monthly expiries are challenging compared to weekly expiries. That's mainly because of multiple reasons like settlements on expiry day and a lot of rollovers happen. And today monthly expiry is not different from most of the previous monthly expiries. So let's check out what action went today. So Nifty almost opened flat, but within the next 5 minutes itself it fell more than 100 points and it kept falling, and in a stretch from the opening it fell down by 200 points. So that's not the challenge, but in the next probably in one and a half hour, so it recovered at the almost most of the fall. So it fell by 200 points and then it recovered almost like 170 points. And so this from here onwards it gave a challenge. I'll show you the straddle premium chart also, and show you how the premium spiked, and then it tried to consolidate here, and then but it tried to consolidate, and I think the premiums were pricing like there may be a potential breakout on the upside, because every time the Nifty was trying to go up, the call premiums were shooting up like anything. There was a risk of call short covering, and as a result the straddle premium, the whole straddle premium was spiking. But during this consolidation, premium started a little bit consolidating, and then Nifty couldn't sustain that, so it started falling, and it formed a formation of lower highs, lower highs, lower bottoms, lower highs, lower bottoms, and at some point of time Nifty broke even the day low also, and of course it shaken up the MTM as well, so which is something I'll explain shortly. In terms of premium, so straddle premium, it opened around at 916. I would say the premium was around 115 rupees, which is not bad given the premium available these days. So I won't say it's great, but at the same time it's not bad. And today one of the challenge with the straddle premium behavior is many times there was a spike of almost like 15 to 20 points. So 15 to 20 points on a base of, let's say 70 to 75 rupees. So which turns out like a almost 20%. So 20% spike in premium multiple times, and especially when the underlying was volatile, it's not easy to trade. Particularly for system traders, it is quite challenging. And so first during that fall, so because of the direction, the straddles with the small stop losses and all, they got the direction, and the big stop losses, they have suffered. And first half an hour was okay, and as it kept falling, so at least the calls were making the money. But when Nifty started making a U-turn, up to here it was shaking a bit, and then this particular dip almost MTM brought to almost like a flat. So it opened negative, and the losses kept increasing, but this particular point almost brought the MTM to kind of flat. But from here onwards, especially this particular candle 1030, it broke this intraday swing high. So from here onwards, so calls started getting short covered very aggressively, and then they kept getting short covered aggressively. At this particular point, all the calls, almost all the calls, it's not almost, it's all the calls, stop losses got hit. So during this particular point, most of the puts, the stops were taken out, and this reversal has taken out most of the all of the calls. So because of that, by this time my MTM almost went up to minus 0.4%. So I'll show you the MTM graph later. So here I was in a loss of almost like 0.4 or 0.45%, and then next few minutes it's a bit of a consolidation. So I was sitting with only the puts. It was scary to sit on the puts, but I was leaving the system to play out, and then Nifty lost its momentum. It started falling. So then what happened is all the put options, so which decayed, So they all started, getting those stop losses, put options, stop losses started getting hit. So either trailing stop losses in some cases it's mostly trailing stop losses, and in some cases the actual stop losses they started hitting. But I mean, so during this particular process, I mean, after this particular moment, some of the new strategies also, I mean, some of them are condition based, or even the time based. So they started entering, and those strategies, puts were taken out, but the calls were making the money. So while the puts started falling, but the calls started making the money. So overall, up to here, I think the MTM was sort of okay. It was kind of balancing, and also straddle premium started falling somewhere around from I think it's somewhere from 12:10 onwards. It's a real fall. So if you see here, so morning it opened at 114, and at some point of time it went to 73. But the real challenge, it came. So as I said, from 73 it almost went up to 103. So which is almost 30 points on the base of 73, which is it was very difficult. I mean, that is when the MTM losses were mounting up like anything. Right. So, and from 12:15 onwards, I think 12:15, 12:20 onwards, the real decay started. But that decay did not come with consolidation in the underlying Nifty. So because of that, so it was not easy to capture the decay, and also because of the volatility nature. So the the direction advantage, whatever was there, up to here. So that was also gone. So because of the reverse, I mean, the puts also got hit. So it was, very challenging day. So I think the whole day went on, the recovery mode. So this particular candle, this was a kind of a killer. So up to here, my losses were somewhere, around like, they were fluctuating between the 0.3 to 0.5% and all. So this particular candle, when it actually broke the day low. So here the puts, I had some puts, which are ATM and even the ITM as well. So those puts shot up like anything for a few seconds. And because of that, I mean, some of the puts, they suffered the SL, and the losses at this particular point, I mean, increased to almost like a 0.85%. So, and yeah, so but this green candle so gave a little bit of breather, and few puts were left out, and then calls, I mean, because of this reversal, I mean, they started the MTM. Loss started coming down, but then again it's followed by this particular red candle. But by that time, it's a 3 o'clock, so there were a lot of calls in the system, so they started cooling off. So but in the end, the loss came down to almost like a 0.5% from 0.85%. So one of the things, I mean, I have done here is I mean, I left the system untouched, so I'll let the system trade, break all these trades, I mean, as it is, and do the whatever the adjustments they have to do, or the respect the stop losses. But here, when I did the check, like around 2:30 onwards, I could see like I have a more skewed positions on the put side. I mean, the number of puts with the premium, some of the entries were something like 14 or 15 rupees or 20 rupees I have received on the call side, but the puts were something like 40 rupees or 45 rupees. So there was a good quantity of a puts with a skew. So I was thinking like if Nifty is going to break the day's low, so they are going to kind of spike a lot, and it may end up like another Tuesday, like last Tuesday, that's what happened. So most of the profits, I mean, were taken out after 3 o'clock. So what I did is, I mean, I quickly created a debit spread. I bought the 24,550 put option, and I sold 500 put option. It's a debit spread, I mean, for the net credit of almost like I think 22 rupees or 23 rupees. So which kind of saved. I mean, I did not do it with the equal quantity. For example, if I had a 300 quantity of puts, I mean, I've done it for something like 100 quantity, like 1:3 or 1:4. So basically to save some profits, or I mean, to basically contain the losses. Today's case, I mean, the basically contains the losses to an extent, I mean, whatever I can do. And if that was not happened, probably, I mean, I would have lost somewhere like maybe 1500 rupees or something per lot, but this particular one, it gave a profit of almost like, so because Nifty kept falling, so this additional trade basically to contain the existing position losses, so that gave a profit of I would say around I think 1800 per lot. So it saved basically it gave a profit of almost on the account size close to 0.1% loss it reduced, right? Because on the averaging side, last half an hour averaging point of view, Nifty almost closed at 24,500. So that is something, I think this is something at one point I covered in the last episode also. Even though if you are a system trader, if you know exactly how many positions you want to have, if you want to take some calculated risk, or if you want to take some additional trade basically to give some comfort for the existing positions, or we can call it as some kind of a insurance by taking a opposite side of other position. So you don't need to do it every time, but at sometimes if you're okay with that, then you can do that. You need some kind of experience to do that, but it's not very difficult. So that's how the price action went. So if you see the straddle chart also, so it's a linear after 12 o'clock, but you see these kind of spikes, this particular one from almost like a 34 to 44, so it's almost like a 20 to 25%. And today what happened is, during this up move, so especially when Nifty started, Nifty call option started getting covered. So when the short covering was happening, so the overall straddle premium went up. So because of that, and the straddle premium went up pretty fast. So because of that, some of my IV spiking strategies also entered, and they started, they got the good premium, but they got the good premium, and they started making a good profit and recovered the losses from the other strategies also. But this particular candle, it stretched the call options, it spiked the call options way beyond. So during that, so those strategies, call options also took the hit, and then the reversal took away their put options also. So my IV spike strategies are kind of like they are counter strategies when you have these kind of IV spikes. But if the once they enter, they may enter at different times. So once they enter, and if the IV continues, so and IV continues with these kind of reversals, so then they suffer. So for me, it's like most of the, if I have to summarize that, in almost all the, except I think couple of strategies, most of the strategies which I entered before noon, so they ended in loss, kind of a deep loss also, especially the ones which I entered in the early morning and all. And afternoons, after 12 to 1 o'clock, they are kind of okay. I think again 1 to 2 mostly red, and after 2 o'clock it's kind of they recovered some of the losses, I would say. So overall afternoon session was okay, but the morning session was challenging, and IV spiking strategies did not go in my favor, and some of the strategies with kind of a small stop losses, they managed to capture the direction. So that's in a nutshell. So overall I have ended with loss of 2.2 lakhs, and this particular account ended with 1,09,000, let's say 1,10,000 loss, and this one is with almost like a 13,000 loss, and this one is with almost like a 97,000 loss. So overall it's a loss of 2.2 lakhs, which works out like a 0.5% on my overall account size. And so it's a 0.5%, and with that all the expiries in August month also has come to an end. And this month I have this is only for the 0 DTE, but even if I include the small quantity that I trade on non-zero DTE, I think the overall month ended flat. So this month ended flat. I think last month was over and above, I think 4%. I think it was 4.5 or whatever it is. I think it's over and above 4%, but this month ended flat. So that's how the day went. And From next week onwards, I think hopefully many people or many traders are aware that the Nifty and Sensex expiries or the weekly expiries are going to interchange. So so next week usually we have a Sensex expiry on Tuesdays and a Nifty expiry on Thursdays. So but from September onwards, as per the new guidelines given by SEBI and as agreed by exchanges, so Nifty weekly and monthly expiries are going to happen on Tuesdays from next week onwards, and Sensex expiry happens on the Thursdays onwards. So many people may have a question like, am I going to change my setup for 0DTE? My answer is no. So in general, the reason is so the kind of a price action you will have I'm talking about the underlying. The way underlying moves by and large on Tuesdays and Wednesdays and Thursdays, it's similar. When I say similar, it's not 100%. Probably 70% of the times, the price action will be more or less similar. But on Mondays, it would be trending, and Fridays it's trending, but you never know in which direction you will get the trending. So Fridays are ideally difficult to predict. Tuesday, Wednesday, Thursdays are more or less they move more or less okay. But one thing is, on Tuesdays generally you will see a kind of a mean reversion. When I say mean reversion, so Mondays may start trending, and then Tuesday may try to go in the same direction for first off, and then start reversing and coming back to the mean of Monday's up move, or if it is a down move, so you may see a reversal on the Tuesday side. All this I'm saying, it's not set on stone. It doesn't happen every time, but I'm talking about the overall average, and if you have seen the chart for many years. But Wednesdays and Thursdays are even more stable, and generally likely to be less trending or mostly range bound. Even if trending happens, it may happen in the range. So from next week onwards, so Nifty expiry is on Tuesday, and Sensex expiry is on Thursday, and I'm going to set up whatever the existing setup I have for Nifty and Sensex expiry. I'm going to run as it is, and in fact, even if you want to change it, there is no way we can able to test it with Nifty 0DT. You cannot test with Tuesday price action. So if we want to, whatever the testing we want to do it, at least I think we need ideally 1 year data, but at least bare minimum we need a data of 3 months. So we'll have to wait and see. If we want to do any further back testing, we have to wait for another 2 months or 3 months minimum to carry out any further back testing. So that's how the difficult monthly Nifty expiry closed today. So Nifty is known for its expiry both for weekly and monthly for the years. From the time I started the trading, even from the time the expiries were introduced. So from today onwards, today was the last Thursday. From next week onwards, we are saying a goodbye to Nifty Thursday trading, and we need to change it to the Tuesday. So for the people who have been trading for a long time, then they understand whatever the little emotion I'm talking about on the in terms of trading Nifty on Thursdays. That's all I wanted to cover. So if you are finding this content useful, give it a thumbs up for these videos, and share it with your friend, and don't forget to subscribe to my channel. Thanks for watching, and take care.